2030 तक अपनी नॉन फोसिल एनर्जी कैपेसिटी को 500 गीगावाट तक पहुंचाएगा।
Well, if you see the Hindustan Power Exchange, this is the third power exchange started in India, and this is led by ICICI Bank, PTC, and BSE.
India's energy mix is extremely tilted towards fossil fuels. Around 45% comes from coal.
In total renewable energy, we have just about crossed 100 gigawatts, ultimately reach 450 gigawatts by 2030.
In this race to avert ecological disaster, the world could use Indian leadership.
Indian Energy Exchange.
IEX, focusing on IEX.
Power is not only crucial for the economic growth and welfare of the nation, but it is also one of the most essential components in creating and maintaining infrastructure. Now, India is the third largest economy in the world in terms of purchasing power parity, and Indian Energy Exchange, which is IEX, was all set to win the game as it was enjoying its monopoly status with 95% of the whole country's trading volume. It was posting amazing results quarter on quarter. The share price of IEX has gone from 80 rupees to 320 rupees, giving a return of 300% in just 1 year. And without a well-established competition, the road for IEX was completely clear. But wait, 30th June 2022, the news of the launch of a new exchange called the Hindustan Power Exchange hit the market.
Talking about the Sensex, BSE along with PTC and ICICI Bank recently filed a petition to launch a power exchange.
Now, does this mean that IEX will lose its monopoly status? Will their sales actually go down? Or does the launch of this new exchange actually pose a threat to IEX, or will IEX just continue to peacefully win the game? Let's find all of that out in today's episode of Finch Story, which is called the Indian Power War. The Indian power sector has a lot of players across all segments of the value chain. There are more than 600 generating stations, 70 odd distribution licenses, and 3 power exchanges. A separate green market platform has also been launched by these power exchanges as well. But with this, there will be a trade in green energy along with competitive price discovery of renewable energy in the market, and buyers will also be able to meet their renewable purchase obligation, which is RPO as well. The Indian power sector currently is basically now moving away from a multi-decade generation of contracts with limited dispatching resources to basically short-term and spot electricity markets. Even though long-term contracts are good, they are now transitioning into a short conservative approach right now. Now, the Prime Minister has also promised that India will get 50% of its energy requirements from renewable energy by 2030, right? He has also promised that India would reduce the total projected carbon emissions by 1 billion tons between 2021 and 2030 and achieve the target of net zero by 2070.
भारत 2030 तक अपनी 50% एनर्जी रिक्वायरमेंट रिन्यूएबल एनर्जी से पूरी करेगा। भारत अब से लेकर 2030 तक के कुल प्रोजेक्टेड कार्बन एमिशन में 1 बिलियन टन की कमी करेगा।
And to satisfy this growing need of power in India, IEX now comes and plays a very crucial role. India's first and largest power exchange, IEX, basically provides an automatic trading platform for the physical delivery of electricity, renewable energy certificates, and energy saving certificates. IEX basically brings together the buyers and sellers in power trading together. It provides a platform for buyers and sellers of power, and it earns a transaction fee on it. Now, with its evolving business model, IEX has basically attracted trading volumes and now has 95% of the market share. Its nearest competitor is the NSE-owned Power Exchange of India, PXIL, which has 5% of the market share in the entire trading volume. Now, IEX obviously has emerged as the default option because traders look for the amount which has the most volume in the exchange, right, to fulfill their needs, and that is why they go to IEX. Now, while both these exchanges started at the same time, IEX emerged as the winner as it always evolved their technology and kept innovating their method. IEX also offered participants the opportunity to trade in electricity contracts called Renewable Energy Certificates, REC, so that the companies can buy these certificates to complete their carbon emission targets. Now, the power demand is also increasing, mind you, right? Because in India, we are seeing that the power is growing really interestingly high, and the demand is also growing high. Because if we compare the per capita power consumption of India with the global average, then it is as low as 1/3 of the world's average. Now, because of so much young blood like us in India, in our country, it looks like the consumption of power will remain high in the next coming years as well. Apart from that, the shift from fossil fuels to green energy will also act as a great booster for the rising power consumption in our country. Now here's what's going to happen in the future. Let's connect the dots. The early moving states will turn into power surplus states, and then they will sell that extra power to the states which do not have power and they need power. So to complete this process, power trading will take place where the excess power surplus states will sell their extra power to power deficit states. And that is where IEX comes in and makes a lot of money in the gap, right? Now let's see how IEX is basically a cash generating machine. The main primary revenue source is the transaction fees, which basically accounts to 84% of all their revenues, and they have something known as an annual subscription fees, which is only 5% of their total revenue. Now, since the start of its business in 2008, the trading volume on its exchange has been increasing at a rapid rate of 30% every year, right? They basically have a very asset light business model, due to which they do not need to require like high capital expenditures as well. The largest capital expenditure they have done till date is a spend of 120 crores on acquiring a trading software from a company called 63 Moons in 2017. Now understand this. They have huge operational cash flows, they have no capex needs, and IEX has basically managed to build a balance sheet of more than 600 crores in cash. Now, when you have extra cash, what do companies do? They basically give out dividends and they make shareholders very happy. And that is exactly what IEX is doing. They're constantly giving good dividends to investors. Apart from that, don't forget, IEX is also now, they basically have a gas exchange called the IGX, which has recently started operations. Although it's still in the loss-making territory, it has already attracted strategic investors and holds a massive potential for the years ahead. Now, what makes IEX stand out? The company basically recorded its highest ever electricity volume during a year, achieving growth rate of 37% year on year. The high growth rate came on the back of two very interesting segments. One we know is the renewable certificates, and you will be shocked to see how much money that actually brings in. Apart from that, we will see, for example, like Tesla, being a manufacturer of electric vehicles, will be a contributor to green energy ecosystem. They will earn something called carbon credit, and they will sell this to companies who are still relying on fossil fuels for their energy needs. Now, till the existing carbon generating companies, they will have to balance their carbon emissions by renewable certificates, and this will be traded on IEX, and obviously they will make a lot of money. Now, this will constantly happen until we move and transition into a renewable economy, which is likely going to happen after 10 to 15 years. Another interesting area is the cross-border electricity trade, CBET, that has been taking place between South Asian countries via IEX. Nepal and Bhutan have been participating in cross-border trades, and Bangladesh is likely to start participating from this year as well. Now, this has started the journey for IEX to basically move from a local player to a massive global player. Now, let's look at some financial and technical terms, right? IEX trades at a very pricey valuation of approximately 48 times PE, right? The PE is 48, whereas the average PE is somewhere around 30, so slightly overvalued. Now, although this premium can be taken into consideration because there is a monopolistic market, IEX continues to be an expensive stock. Now, IEX also has a very strong balance sheet and has no loans. It's basically a tech-driven platform that enables a company to give a high premium. Now, because they're asset light, because they have good tech, basically IEX has a ROCE which is 64.5% and ROE of 49.5%. But what's happening right now? There has been a massive drop in the share price of IEX, which is currently trading at almost 50% lower than the 52-week high price of 318. Now, this was mainly because in January, the public holding was 30% and now it is around 52.53%. Basically, FIIs reduced their stake and we retail investors started buying this a lot, right? Now, the primary reason for this that the regulatory body of India granted the final go-ahead for India's third power exchange, and that was Hindustan Power Exchange, and this was why IEX started falling down.
Well, if you see the Hindustan Power Exchange, this is the third power exchange started in India, and this is led by ICICI Bank, PTC and BSE.
IEX is all set to face the new competition, but in very tough market conditions. Now let's look at all the negatives that can go wrong with IEX. Now, if the government decides on something that is against the business model of IEX, then IEX can get into trouble. Why? Because the IEX is very government regulated. The government might just come tomorrow and say all the exchanges should now start charging less fees per transaction, then that will take a direct hit on the revenue of IEX. The second factor is that they can play a part in the loss of market share, which is like HPX is now coming out with another exchange, so IEX can actually lose its tag of having the highest market share. Now imagine from 95%, if it goes down to 90 and 85, stock price will now reflect that and the market price will go down of the stock as well. Now IEX has also seen a massive drop in the trading volumes also in the last few months. So these are some of the negatives that we are seeing right now. Now here is my assessment as an investor. IEX is an exchange which operates as a monopoly in an extremely highly regulated environment. FIIs, who were the largest shareholders, exited while the retailers got too excited and came in because of the media jump, right? Now, I think the company will grow, but I feel this will also take a lot of time. The potential is there, but it will take definitely at least 5 to 10 years. Now, impatient people who have bought in the 220, 240, 300 levels are cutting their losses and trying to exit. At the same time, FIIs are also exiting the stock. The domestic front, people like us, the regulatory overhang continues as they have capped electricity prices to 12 rupees a unit. So much for the free market sources that we talk about, right? Now, IEX future, basically there's some income buffers are likely to come from licensing fees, and if IGX, which is a gas exchange, starts getting more money as well. Now, based on that cash flow and the dividend payout ratio of 60%, a fair price of IEX would be 130 to 132 rupees per share. And that's the price if it goes down to I will start adding IEX. Now, every coin has two sides and things can change for the good in a very short span of time, but let's take that also into consideration. What will happen if government tells IEX to hike the prices, right? If they tell them to hike the prices, then the revenue will immediately start going up as well. You see, in this business, the number of exchanges does not matter. It's only volume. More volume equal to more sellers equal to more buyers equal to more profit for IEX. Finally, let's talk about the future of IEX. While the share of the short-term energy market players of the overall pie have remained constant at around 10% for the last 10 years, IEX share in the market has been increasing at a rapid pace. Yet, its costs have grown by only around 22 crores as the cost structure is dominated by fixed cost. Now, the platform business model has attracted a large number of investors in recent years due to the ability to scale without any cost. So that is why IEX looks very interesting. But does HPX, which is the new Hindustan Power Unit, actually pose a threat? The Hindustan Power Exchange is coming as the third power exchange in the country, which is promoted by ICICI Bank and PTC India. Now, the exchange has promised to offer speed, transparency, better price discoverability in the execution of trades. Now, the introduction of HPX will give a definite push to the development and progress of spot trading in electricity, as it will promote market efficiency through advanced technology. And basically, this will maximize the value for the power market. But we can also see power stocks doing really well. Your Tata Power and Adani Power will now have a better market to actually play around with, right? So this is going to be very interesting to see what is the future of the power market. If you look at the electric vehicle consumption, the power energy contracts are also going to be traded very heavily on that as well. Now, IEX basically, in my thoughts, can continue to be a market leader in the future, but will have to overcome a lot of challenges because the government is throwing a lot of new things at it, right? The special thing about this company is that even if 10 other players start an electricity exchange tomorrow, they won't be able to gain a massive market share because they have 95% of it and most of the volume is here. So all the volume has to leave this area and go to a new exchange, which I think is definitely very difficult. Now, exchanges cannot compete with each other by slashing prices. That is fixed by regulators, right? So they have to figure out a different way where the competition has to come and take away all this. So guys, I hope you guys like this video. This is a quick breakdown of IEX from a fundamental standpoint. We looked at what it is going through right now, what is the new competition, the positives and negatives, and a price analysis. So I hope you get the whole picture right now. If you want any other company to be broken down like this, put it in the comments below and we will do that for you as well. Thank you guys. This was FinStory for today. This is me, Shashank Godippa, signing off. Take care. See you guys. Bye.